Glenn,
Yes.
what are your thoughts on, just let's say in two parts of it, what are your thoughts on the overall concept of this deposit scheme, pros and the cons, and the fact that the government has brought it in early?
Yeah. So, I mean, potentially what I'll do is even just explain what it is
Perfect.
for all our viewers out there. The First Home Guarantee Deposit Scheme is the government actively assisting first home buyers to purchase a property. So they essentially allow people to get in with a 5% deposit plus costs, an important little side note there. But they act as a guarantor, meaning that you avoid the lender's mortgage insurance that you traditionally have when you're borrowing over 80%. So in answer to your question, that there are a couple of questions there.
Yeah.
It does certainly help out first home buyers in terms of reducing the costs to get in. So the lender's mortgage insurance is obviously a big barrier to entry. So people can get in without that. However, it inflates prices. So what we're seeing, and with the government bringing forward the changes, it was slated for the 1st of January that income thresholds are being removed and certain caps of purchase prices are being increased. That was due for the 1st of January. It's now the 1st of October. So as of the 1st of October, any first home buyer can apply without a income cap. So previously,
What are the price points up to now?
Yeah, in Victoria or Melbourne Metro, it's now up to $950,000.
So someone can buy up to a $950,000 property.
Yes.
No income caps like they used to have.
Correct. So
5% deposit.
Correct. So
plus costs.
Essentially a couple $100,000 each. They could get in with, say, $47,000 as your 5% deposit. Let's call it another $50,000 for stamp duties. You can get into a $950,000 property with about $100,000 as your deposit.
Can you see this putting massive upward pressure on prices?
Absolutely. It's a no-brainer that in the past we've seen the caps being at 600,000 and then up to 700 in various years gone by. It's going to do exactly the same thing, where previously a property that was maybe listed around about the $800,000 mark had your first home buyers finishing at that 800 point and maybe then other purchases, early 800s. All of a sudden that is going to create a little bit of a bubble. Wow. Now you may be going to have 5 interested parties, all bidding, all being able to go a lot further than what they could. And of course,
So this is going to be like a big night out in the town. Feels really good the night you're out.
Yep.
In a year or two, there's going to be a big hangover.
Correct. People are going to, again, overcommit to purchasing property. They're going to have pressure on their property prices.
So here's a question for you, Glenn. I don't think you and I, when we speak about a lot of things, we probably haven't spoken about this. What are your thoughts on, just in general, the government getting involved in any way in helping people buy a house?
It always creates artificial positioning.
Yep.
So whenever anyone gets any particular handout, we see a reaction. Yep. And years ago, global financial crisis, there was a stimulus where we all got, I think it was $600. Q going and buying TVs and all the rest of it. So don't think it necessarily helped people with their living expenses, which was probably what that was designed for. It was luxuries and people went out and bought things. It's the same with your first home.
Yep.
Again, in previous years, there has been a grant that the government actually used to physically give you $10,000 or $15,000 cash. If you're in regionals, it was doubled, but that didn't help people. It didn't levelize the prices. What it did was it bumped them all up by 10 or 15 grand because first home buyers have got the ability to go and spend that, so they do, and it inflates property prices. So
yeah, it's interesting. I mean, I'm a big believer in let the free market do what the free market's going to do.
Yeah, and that's a way of putting it.
The smallest amount of government involvement we have, whether that's in property, whether that's in business, in general society, to me, the better. When you let the free markets do what the free market's going to do, people are going to lose sometimes.
Yep.
But to me, it's no different than sometimes your body needs to get sick so it can heal itself.
Yeah.
The economy needs to get sick so it can heal itself and get back to a point where it's really healthy. And that means get rid of government bailouts. Hey, if you run a poorly run business and it goes under, maybe it should go under. And if property prices and real estate's are left alone by the government, then the market's going to do. And I would dare say, if we remove the government involvement in all of it, the property prices will probably settle and actually stabilise down and make it easier for everybody to get back in there.
Yeah, 100% right. Any sort of intervention always, tweaks and interferes.
They buy votes, don't they?
Yeah.
So Glenn, to help people out there, to help our audience, to help our clients, can you go over what banks are working with these new schemes? How is it going to work for people now who are there and say, great, let's bring forward our purchase from next year to now?
Yeah, sure. So the banks are the same lenders that have been around for this scheme over the past few years. They're continuing to remain active.
Yep. Who are they?
Yeah, so you're looking at the major lenders, CBA, NAB, Westpac. Westpac's an affiliate Bank of Melbourne as well. Yep. So out of the majors, those three players are still actively involved. And then you go down to some second tier lenders, which there are probably 20 to 25 building societies, credit unions, mutual banks that are accredited under the scheme. So lenders such as MyState, Auswide, the Teachers Mutual Group themselves are probably the bigger players, Great Southern Bank as well, maybe the old Credit Union Australia, as well as, again, some of the smaller lenders.
Someone's sitting on the fence whether they should buy?
Yep.
What are your thoughts? What's your guidance to someone now looking to buy their first home?
So the first point of call is obviously the purchase price. Where are they looking at? Where does that land? So if they're looking at a purchase price that's going to land within the current scheme, then absolutely, I think you look to make a purchase when the time is right for yourself. And if that's now, great. If it's a little bit later, then so be it. If you're looking at maybe getting into the property at a purchase of somewhere in the 800s, I think it's probably going to be pretty wise just to wait. It's only another month away, but in terms of the benefits that are available for you, your savings on your mortgage insurance is going to be huge. And also you're going to be eligible for a cheaper interest rate as well. So even though you may pay slightly more with a bit of extra competition, I think waiting is going to be wise. Have a chat with us, get your finances in order, and then come October 1.
So you think people should be waiting to buy?
If they're in that bracket, yes, I do. Because otherwise, they're not going to be eligible for, or potentially you could look at other options in terms of a family guarantee.
So waiting to buy until October?
Yes.
Perfect.
Yep. Yes. Yeah. So waiting to buy until October.
I would agree.
Unless there's another option and you wanted to try and beat that market with perhaps a conversation around being a family guarantee, but if that's not possible, then yes, we wait. And your stamp duty on your mortgage insurance on a purchase at 800 plus thousand is probably 30 to 40,000.
So when you go through there with people, because there is a slight window here for people to buy before the potential increase in prices.
Yes.
So if someone is able to get a family guarantee,
yes,
maybe explain what that is.
Yep.
Could there be also I call it a 6-week window where they could actually buy a property for cheaper, significantly potentially, than what they would if they waited till October?
Yeah, absolutely. And that would be the family guarantee. So with the scheme, the government is essentially acting as a guarantor. So you avoid the lender's mortgage insurance that's normally associated with an 80% or higher purchase. So another way of avoiding mortgage insurance is by having a family guarantor. Mum or dad that potentially own property can offer that to the bank. So the bank take that as a second security, and it allows you to borrow up to 95, in some cases 100 or even higher percent of the value of your property. So you could then potentially, with mum or dad offering assistance as additional security, you could purchase in the next 6 weeks without as much competition and without as much pressure as well. So that could potentially be a good outcome. Get into the market sooner, avoid the competition, which is always going to have an easing of pressure on prices, and away you go.
No, awesome. Thanks. It's good. Good advice.